Did you know that 70% of Americans believe they need thousands of dollars to start investing? That's one of the biggest myths keeping people from building wealth. Let's bust it today. Welcome back to Simply Money. Today we're going to be busting some of the myths and misunderstandings that keep people from investing. There are so many common myths, and we're going to highlight some of them and how those myths prevent people from reaching their financial goals. And it's crucial to separate the fact from the fiction. Just to get started, let's look at a few things like people needing to be rich to start, thinking the stock market is just gambling, or assuming you need to time the market perfectly. These mislead people. These misconceptions often cause fear, delay action, and result in bad decisions. Let's explore some of these myths and debunk them right now. Myth number 1, I need thousands of dollars to start investing. That's just not true. Many platforms like M1 Finance let you start with as little as $1. Fractional shares and robo-advisors have made investing accessible to everyone. A lot of people think, I can't buy a share of this company because it costs $500 and I don't have $500 to start. You can buy fractional shares. And you may think, what good is that? I only own 1/10 of a share. You got to start somewhere. I just recently did a video and was sharing the power of doubling a penny for 30 days. And many of you have probably heard this story and talked about it when you were kids. Would you rather have $1 million or a penny doubled every day for 30 days? Well, at the end of 30 days, that's $5.3 million, the penny doubling. So I'll take the penny doubling for 30 days. But most people don't see that doubling power. But even more so is after 10 days, that penny doubling is only $5.12. And you think, I'm a third of the way there and I only have $5. And after 20 days, you're only at $5,000. You're 2/3 of the way there. 66% of the time has passed and you only have $5,000. See the power the next 10 days? You go from 5,000 to 5.3 million. That's why you don't need lots of money to get started. You just need to get started and let the power of compounding work for you. Take that fractional share, if that's all you can get, and invest it and hold it. Myth number 2, investing is just too risky. It's like gambling. Well, reality is, while all investments carry some risk, diversification and long-term strategies significantly reduce that risk. Gambling is short-term, and it's chance. But investing is about building wealth over time. I did a video, you can check it out on the channel, on the risk of the stock market. What is the percentage chance of you losing money in the stock market if you hold it for 6 months, a year, 5 years, 10 years, 20 years, and seeing the average return potential and the risk of losing money, and how the average actually of gaining money drops to a nice even 10% in the S&P 500 over time, and the risk goes down to 0 of losing money. The odds based on historical averages that you would lose money after 10 years of holding something becomes 0. Now, in 1 year, your odds of making money are significantly higher. You could make 30, 40%. But your odds of losing money are much higher as well. And so that is the difference. It's a long-term mindset where you reduce the chance of loss, but you decrease the overall gain. But I'll tell you what, I'll take 10% over 30 years any day. So that's myth number 2. Myth number 3, you have to time the market to succeed. No. Time in the market beats timing the market. It's an old saying that's been around for years, and it is so true. So many people try timing the dip to buy and selling at the peak, but what ends up happening, more people lose money because they sell in the dip and buy at the peaks. Timing the market is not the way to do it, and you don't have to do it in order to gain. Dollar cost averaging is the way to go. You buy a certain amount, say it's $100 a month, every month, regardless of market conditions, and that stabilizes your volatility. Yes, sometimes you're buying when it's overvalued. Sometimes you're buying when it's undervalued, and it averages out and it smooths out that volatility Don't try to time the market and don't feel like you have to in order to succeed. In fact, trying to time the market's a good way to fail. Myth number 4, only financial experts can invest successfully. Brr, wrong answer. Over 85% of managed mutual funds do worse than index funds. If you invest in an index fund, it is automatically managed by its index. It manages itself. It brings in things, it kicks things out, it does the managing for you. It's basically set by the index. And 85% of them do better and outperform their counterparts in mutual funds because financial experts, no matter how well they are trained, still have the human element and make mistakes and can't consistently beat index funds. So you do not need a financial expert to be successful. I'm not saying don't consult with a financial advisor, but you definitely don't need one to be successful. There are free resources, tools, simplified platforms. Anyone can learn to invest wisely without needing a finance degree. And you do not need to pay those high fees. Just don't fall into the trap of listening to the latest TikTok on how to invest, the new up-and-coming thing. Be wise, do your education, learn about investing, understand a little bit before you get into it. Make sure you're not putting all your eggs in one basket. Make sure you're not taking undue risk. Make sure you're understanding simple things. There are so many great resources out there. Those are the 4 biggest myths keeping people from investing. The most surprising truth, time in the market beats timing the market. The 4 myths. You have, I need thousands of dollars to invest. No, you don't. Number 2, investing is too risky. It's like gambling. No, it's not. Myth number 3, you have to time the market to succeed. No, you do not. You need time in the market. And only financial experts can invest successfully. No, anybody can if they do their due diligence. What are your thoughts on these myths? Leave a comment down below, hit that like and subscribe button, and we'll see you next time on Simply Money.